Hello everyone, I'm Adam Black. For those of you that don't know me, I'm Head of ESG and Sustainability at Coller Capital. In 2020, Coller expanded our ESG function, and I'm pleased to welcome my colleague Selina Lin to the firm. Let me start by thanking you for making the time to listen to our perspectives on ESG and sustainability. And on behalf of everyone at the firm, I hope that you and your families are keeping well as we navigate through this unprecedented time. In this short film, we will run through Coller Capital's approach to ESG and highlight some of the key findings from our 2020 ESG report. We are living through a period of great change and uncertainty. The current COVID-19 driven crisis and its impact on society and livelihoods, and also the bigger crises to come, namely those relating to a changing climate and the prospect of ecosystem impairment, even irreparable collapse. So it is now, more than ever, that we need ESG to stand tall and to be robust. Paying lip service to ESG might work in the short term, but it is at a time of crisis when any veneer of ESG gets washed away. An important reference point for our programme, and something we ask ourselves frequently, is whether what we do remains fit for purpose. Whether we remain true to our mandate as a secondaries investor, that we do not overpromise, but do as much as we can, within reason, to influence others to be better. That our processes are repeatable, adaptable, and constantly improving. We are mindful of the important role we have as ESG professionals within the investment team, and we make the most of this to help drive systemic change in private equity via underlying portfolio GPs, through education, best practice standards, and collaboration. We are proud of the relationships we have with partners such as the UN-supported Principles for Responsible Investment, PRI, the FAIR Investor Initiative, the Initiative Climat International, ICI, CDP, and others. Mindful of the importance of advocacy and stakeholder engagement, particularly in the role we play as secondary investors. We found COVID-19 to be a serious test of our policy and processes, and we found that they stood up to that test. And at Coller, we found adaptation remained key to that being the case. We sent our survey to the 160 GPs in the KIP 6, 7 and 8 portfolios. The comments and charts in this report refer to the 92 GPs that responded, and they represent 433 private equity funds, the majority of Coller Funds FMV as at the 31st of December 2019. 58% of the respondents are experienced private equity investors, having been investing for 2 decades or more, and the majority are independent general partners, GPs. Respondents are mainly headquartered in North America and Europe, although 22% are based elsewhere in the world. Most responding GPs focus on buyout and growth private equity investment strategies. The 2020 report is largely based on responses received at the outset of COVID-19, and for some GPs before the true impact of the crisis had been felt. It will be interesting to see what its impact has been among underlying GPs in the 2021 survey, and whether they found something akin to our own experiences. What we have seen from the 2020 response is continued progress at a thematic level and continued progress on institutionalising ESG, but significant challenges remain. It is fair to say that there are probably more standards and principles than you can shake a stick at when it comes to ESG, and that some consolidation would be welcome, albeit carefully considered consolidation. About 2/3 of respondents are a signatory to a set of ESG principles or standards. The UN-supported Principles for Responsible Investment, PRI, being most common among responding GPs. Almost half have signed up to the PRI, followed by the American Investment Council AIC guidelines, adopted by 14% of respondents. Adoption by region differs, with over 4 in 5 European GPs signed up to a set of ESG principles, compared with around a half of North American GPs and 2 in 5 GPs based in other regions. It's also encouraging to note that there remains a focus on climate among responding GPs, with 41% considering the issue within their ESG policies. When we view the climate crisis from the perspective of GP implementation and monitoring, we found responding GPs continue to make progress in measuring the carbon footprint of their portfolios. In 2019, 56% of responding GPs said they were focusing on carbon footprint at the portfolio level. This rose in 2020 to 59%. And half of responding GPs said that carbon neutrality of portfolios was achievable by 2050, with almost a third believing that to be achievable over the next 2 decades. We also note the continued growth of ESG as a function. 55% of responding GPs have dedicated ESG resources at the GP level, and the same proportion expect a greater focus over the next 3 years. It is pleasing to note that oversight of ESG is often seen at senior levels within firms. There's more work to be done to tackle complexity within ESG. Aside from climate risk and fund level net zero targets, this is also most obvious when looking at the findings related to diversity at a senior level. While an increasing number of responding GPs say they focus on diversity within their own management company and at their portfolio companies, rising from 71% in 2019 to 77% in 2020, progress at a more senior level has plateaued, with the percentage of women on GPs' investment committees remaining around 40% since 2017. So COVID-19 has been and remains a serious test of ESG. And for our own policy and processes, we recognise the importance of adaptation. It is why, for example, that at the level of the funds during the past 12 months, we included enhancements to the way we use third-party and in-house data sources for more in-depth screening across all prospective investments. We made more widespread use of investment professionals in respect of investment ESG screening, and we welcomed investment professionals into the ESG function on a rotational secondment. We made more widespread use of investment monitoring colleagues in respect of ESG. We hired an additional full-time ESG resource into the investment team, and we completed forward-looking climate risk scenario analysis across the funds. Walking the walk has also long been a key pillar of our programme, and so, for example, retaining our climate neutral status at the level of the firm and continuing to promote diversity and inclusivity and to focus on staff welfare and mental health remained and will remain important features of our programme. We believe that all this has made our programme stronger and further integrated ESG into the day-to-day workings of the business. 2021 and the years ahead will be the litmus test for ESG, for the commitments many have made and for the commitments many will make, particularly in the run-up to COP26 in Glasgow. We think that there will be many more GPs focusing on outcomes and the substance of ESG, and that private equity will rise to the challenge. We will certainly seek to play our part in helping that become a reality. If you would like to learn more about ESG at Coller Capital, you can find more details on the Coller Capital website, including our ESG white paper and a full library of our ESG reports. Alternatively, reach out to any of the Coller team and we will arrange to send you copies. More information on ESG in general can be found on the websites of our partner organisations, including the PRI, the International Corporate Governance Network, ICGN, CDP and FAIR. That concludes the presentation. Thank you very much for listening.